All right, guys, awesome. We're live on the Independent Investor Channel, Friday live stream, 9 o'clock Eastern Standard Time, hailing from Virginia on the eastern seaboard of the U.S. So for you folks that are catching the live stream after we put this onto YouTube, thank you so much for your devotion. I don't know, hopefully it carries with it the same level of excitement when you guys are catching this on the replay. I've got a jam-packed gallery of guests that are due to come on tonight. I do want to do some opening shout outs. Obviously, we do that within the first 10 minutes of the live stream to get folks some acknowledgement for really providing unique perspectives on the investing landscape. I offer my unique perspective, but there's, 20 of us or so in this community that are content creators and pretty devout to their craft and deploying this wealth building strategy in their own way. I set out my blog article this week on the Independent Investor Channel website. If you guys have not kicked over and checked that out, please do so. This week's article was custom fit. You'll see it here. You cannot miss it. If you guys have not kicked over there and at least threw your hat in the ring, I will not spam you, okay? This is just going to notify you when I put my articles online. It's just a different way to consume content. And I think a lot of people prefer to read about my particular interest in this topic and the unique nature in which I take these topics up. I'm able to expand a little bit from an artistic perspective, writing these blogs. And I think some of the folks that have already caught these blogs and kicked in there would agree with me. Thank you to All Good, who is in the group, who subscribed, Gen X Dividend Investor, along with many others, have dropped their subscription request to me. Again, this is what you get. You get direct connection to me, okay? And that's typically what I like. That part of the reason why I do this community so adamantly is the investing topic demands some level of monitoring and some level of awareness, okay? Now, I typically try to dabble in certain life topics as well, which really takes what I consider to be an infinite topic, that being investing, and expands it out to be your life. And I think you guys are going to find that this custom fit will allow you to realign your focus and making sure that you're going through your day-to-day activity, putting the focus where it needs to be. And I think a lot of people need to spend a little bit more time looking in the mirror as opposed to looking at what the neighbor has parked in the driveway. So you guys will enjoy that read. Wanted to put a little plug in for the website. I'm satisfied. It is a bare bones website to the point where I was happy releasing it to the audience, and will continue to evolve and grow this product as we think of creative ways to revolve around this topic. I do have strategic goals for each of my properties. Instagram is a little bit more personal. You can kind of see where I'm coming from. I like to do some strategic things there. The blog, YouTube, the Facebook group alike, really, I want them to take on their own personalities. So thank you so much for you guys that have kicked over there and supported that message. All right. So obviously, the stock market is doling out all kinds of confusion for all the experts out there who seemingly thought that they knew what direction the stock market was going to go. I took a strategic bet over the last month or so, and I just happened to be right. Okay, that's not going to happen all the time. Well, where do we go from here, I think, is the question. And I get this every single week. I get this question. Well, where's the market going now, Ryan? What's going on? What's going on? And my simple response is I don't know. My more complex response is something that I have looked to achieve in way of an explanation over the catalog of videos that I've released through YouTube over the last 3 years, totaling about 425 videos. All right. So instead of me answering that question individually, certainly go back through, join the live stream, give me an opportunity to engage with you. This is an opportunity that I provide for 2 hours, and I do not stop. I'm bouncing back and forth between questions, between guests. I've got William, who was on the channel a couple weeks ago. He was my young investor who was fired up, and he's going to come and update us on his progress. I've got junior stock investor as well in the gallery. He's chilling. He's going to come on as well and update us on his progress. Always enjoy having Junior on the channel. It's awesome. And then finally, at the end of the last week's live stream with David Oldenburg, who actually had me as a guest on the town hall. If he's in the thread tonight, he's welcome to share that link to the town hall that we had. It was more real estate related, but I thought it was absolutely prudent to take a watch on that. I kind of felt a little bit like I was coming from a different perspective. There was a lot of real estate professionals, realtors, house flippers, mortgage officers, and the like. And I was coming a little bit more from the customer perspective, having bought a couple homes in both Texas and Detroit, and then transferring over to New York City. Junior can attest to how expensive stuff is up there in the Jersey, New York area. And then now finally kind of settling down here in the Virginia area. So I've got a perspective that allows me to look at different pocket markets and comment as a customer. So if you guys have not joined the Facebook group, I encourage you to do that as well. I'm combating a lot of spam in there, and I'm going to tighten down on that group, no doubt about it. I don't have the time. That's why a bunch of you guys were anointed with wrenches tonight. I don't have time to deal with that garbage. I don't. I spend every second of this live stream focused on people who want to learn and who want to evolve. Me being included in that statement. I want to learn too. So I don't have time to deal with people's garbage, and I refuse to do that. And if it just so happens to be questionable as to why I'm doing this on YouTube and why I don't tend to focus on the subscriber base growing exponentially overnight, that's why. I would rather have a quality group in this. Why? Because nobody seems to be pursuing community building the way that I am. Outside of some of the channel creators inside this group who take this perspective like I do, it's seemingly shoot for the stars at all cost, and there's nobody that we can step on quick enough to get to the top. That's not what I look forward to. I look forward to the community nature of this every single Friday. And I think when life events sometimes grab us a little bit and remind us that life is tough sometimes, I think it's really, really cool to have a bunch of like-minded people come together and revolve around a topic that seemingly everybody in this group has a common thread or a common affiliation with. And I think that's a pretty special bond. I want to continue to grow with that bond, and I will continue to foster that relationship going forward. It really means everything. It's the heart of the channel on the Independent Investor channel. So if you're new to the live stream, we do a lot of different things. I try to keep this as dynamic as I possibly can. I do not script my live streams at all. I don't. I open it up. I open it freely to anybody to come on, and I'm very, very satisfied with the product that's turned out every Friday. What does that mean for you? It means that you can have some level of support structure if you're going to go at this investing opportunity. And we do so much on this community in talking about wealth building, portfolio building. Usually I keep the focus in my weekly uploads for new investors to really, really dive into a real account like mine. For example, I walked you through portfolio building and asset allocation and investor profile this week. Those videos are funny, man. I don't put those on YouTube to go viral. As a matter of fact, I just kind of go, whatever. For the people that watch that stuff, they're better for it, and they'll come out of it a better investor. All right. So I won't apologize for putting videos up there. I will not search out a wave to try to jump on the algorithm. Forget it. I put what I want, when I want, through YouTube, how I want. And that's the way the channel will continue to roll. And I've had a ton of people hit me up over the channel and say, Ryan, I shared it with family. I shared it with work colleagues. That's what I'm talking about. You can explain to me a more solid relationship that I could have with those people if folks are thinking enough of me to share the message. Legit, I'll take it. All right, I'll take it every single time. And that is the loyalty that I'm talking about. And I cannot tell you how much I appreciate the loyalty on the channel. It's a humbling opportunity for me and share my story through a testimonial. And that's what I expect. We're going to have 3 guests come on this evening. It's usually centered around people sharing their story. And I think if people sit back for a second and they say, man, Ryan deploys his strategy this way, but man, I've got William and junior stock investor, and I've got Connor as well, who popped into the gallery right before the live stream, who I owe, because I brought him on at the end of last week's live stream toward the end, and I invited him back because it was just an absolute treat to get to talk to Connor, man. That's the stuff. It makes me stronger. So if there's any payment that I ever get through the channel, it's certainly that. It keeps me sharp. It keeps me aware. It keeps me wanting to engage in my craft. And make no mistake about it, investing is my craft. All right. I want to do some shout outs for sure. Gen X Dividend Investor popped in the group. Dave with Hidden Freedom Investing is also in the group. If you guys have questions for each of these channel creators, do not hesitate to reach out to them. Passive Income Investor is in the group. Kyle and Matt Money as well. He was the gentleman that I was speaking a little bit more about the life piece. And we got your back for sure, Matt. You know, and that's part of the beauty of it. This is an online community, certainly, but I am absolutely grasping for that little deeper meaning to define why it is what we're doing. So I don't want to speak for anybody other than myself, but I will say on behalf of myself and the channel and a lot of other folks who have expressed their concern as well, man, stay positive. Certainly, if you want to come and talk stock with me, you're welcome to do so. All right. Matt gets one of the shout outs of the week. I had this planned actually, but Matt was able to provide me, picked up a little tidbit of what I was looking for some sector exposure in the materials sector. He picked up on me saying that it wasn't really one of my favorite stock sectors to invest in, which it's not. I think it's extremely important sector, but you know, he threw out BHP Billiton, ticker symbol BBL. So I picked up 100 shares of that this week. Thought I'd give Matt a nice shout out. Him and Kyle admitted me to the group, their Facebook group. And to be honest with you, I'm not surprised they admitted me. I'm getting a lot of spam in my group. And again, I've already expressed my frustration with that. I'm going to start declining responses to come in there because that is not what I want. I don't want to have to do that. But if you can't at least agree to the rules of the Facebook group to not spam the group, then I don't want you anyway. Good luck to you. I wish you all the best. I don't wish ill will, but if that's your intent in my group, you can do it elsewhere, quite frankly. So kudos to Matt for sure. Had some good dialogue on his Facebook group as well. There's some shout outs as well to JMac Investing. Jason usually gets a shout out every week, and that will continue. Why? Why do I do that? Well, first and foremost, it's because I want to. And second, Jason is putting a really good product forward on Wednesday. The live stream that he puts forward, he usually kicks live at around 8:30. So just a plug for Jason. He's doing a good job, man. He's trying to structure his live streams in a way that's they're actually very, very educational. It does a really good job of walking through some really cool topics. And he's got the Jason twist to it, throws in a few jokes, and I wish he'd do that more, honestly, because that's kind of when his personality shows through. But kudos to Jason J Mac Investing. Keep hustling. You know, you've increased that channel pretty quickly in a short amount of time. It's just like buying a dividend stock, man. It's not going to pay off for you overnight. It's the same philosophy. So stay positive and keep on doing what you like to do. And I can really tell. That's why I try to make a point to pop in and at least say hello to Jason on the live stream every Wednesday. I would encourage each and every one of you guys to do the same and support his mission as well. I know Kyle has come out with a new channel as well. Kyle's been hustling really well. So kudos to Kyle as well. I can't keep track of all the projects that he's got going on. But you know, what I see in that and looking through my prism and perspective on what Kyle specifically is bringing to the table is he's trying to get ahead. And that's really commendable as far as I'm concerned. You know, I don't know if I was quite as squared away. Maybe I was. I don't know. He reminds me kind of me when I was his age. But you know, he's laser focused, and the way that he was outlining his schedule is something that resonated with me. It really caught my attention when he talked about getting up, filming the video, taking a small break, coming back, editing, boom. This is how successful people think. And it kind of goes in line with my blog that I wrote, Custom Fit. And that's some of the mental makeup that can help each and every one of you guys that are maybe looking to start investing, guys and gals, looking to start investing. It is a mindset. It really is. If you can start to condition your mind day in and day out to think positively, you're going to be so much better off in this gig. You really are. All right. There was one question that I kind of wanted to get to if I can find it. It was a super robust question about dividends. And I want to read the question if I can and throw it up to the group here. I might have skipped over it. If I can't find it, no big deal. Got Financial Investor here in the group. Another shout out. That's awesome. Brent, thanks for making your way in here. I got Steve T in the group as well. You guys, if I'm not giving you a shout out during the live stream, man, make sure you give a little bit of a notice here. I've got Dave Oldenburg as well, who was a guest on the channel last week as well. Shout out to you, Dave, as well. I don't see that question anyway, but I remember what it was. It was, how do you go about picking quality dividend stocks? And it was from Hulain, I believe. So this is your question. Really kind of comes down to managing risk for me. For example, I talked about that BBL trade this week. The three other positions I entered into was a small company, industrial company called Boeing. We picked that up at 122 on the entry. That is the fifth entry that I've had on Boeing. So a little bit of an insight to my swing trading activity. However, I want to flip the script on Boeing, and we're going to go long. It's a large position. We'll see how it works out. Okay. Intel as well in the big tech, and finally IBM. I declared those Wednesday on JMax live stream. But it really does kind of come down to what I put forward in the video this week for portfolio allocation. I really am looking at the best quality dividend yielders in each of the sectors. I'm really trying to achieve dividend growth in the portfolio, and where I'm trying to achieve that passive base of ETFs in the portfolio, that's easy. Doesn't really carry a whole lot of necessity per se to do a lot of research on the ETFs. You really just need to get your allocation right. And mirror that with your investor profile. That video was released this week. If you didn't catch it, watch it. Okay. I don't need to be redundant on a live stream for what I already put through. But you can get in on some pretty good entries right here. I thought Chevron, for example, provided a really good entry. I would go ahead and mirror Chevron with ExxonMobil as well. I don't think there's a whole lot of need to go a whole lot deeper. I think from a valuation perspective, both Intel and IBM were both bought on valuation. Okay. I think CVS and Bristol Myers Squibb as well on valuation here. The financials look really, really well. You could probably throw a dart at a dartboard. Goldman Sachs is the new financial position for me, but financials look really, really good here, guys. So don't make it more difficult than it has to be, and don't try to pick a needle out of the haystack when you're picking these quality companies. We throw out enough quality in these groups to where we're covering a good percentage of the dividend aristocrats and the kings. But to be honest with you guys, paying a dividend for over 50 years, that list really isn't as attractive to me as the achievers list, to be honest with you. And tune into some of these other cats, like Jason, for example. I had a chance to look at Cold. I had a chance to be turned on to a couple of real estate REITs that I wasn't that familiar with. I think some things I saw with Cold looked really, really good. I think the dividend yield was a little bit low for how pricey it is. But what an awesome stock. I mean, it's very highly reviewed, and they're in a niche business where they kind of own that cold storage aspect. So, join in, grab your awareness in the community. I always say that picking your single stocks is the easy part about portfolio building. It really is. Okay. I'm more interested in how prepared you were in February and how you feel now, and reflect back on how you handled this volatility over the last couple months. I'm more interested in that than building a basket of perfect stocks, because I'll be the first to tell you that doesn't exist, but we do a pretty good job of pushing out best of breed quality on this. And it's not a big secret, guys. Every analyst on CNBC, you see their longs and you see their shorts. You see every one of their longs are all the same as ours. They're all the same, man. Apple, IBM, Intel, JP Morgan Chase, CVS, Bristol Myers, Abbott Laboratories. They're all the best companies in the world. They're not screwing around. They're not trying to find a needle in a haystack. So let's stop trying to do that and get our heads collaborated around what are the best in each of the respective sectors. McDonald's, Home Depot, right? We could go on. And that's what we're looking to do, is jam as much quality as we can into the portfolio. All right. So with that, guys, I'm excited to bring my first guest on. I'm going to try to keep it to 15 minutes because I do owe Connor a spot there. And then junior stock investor, I'm going to bring on after that. So I'm going to try to leapfrog these folks into the live stream. And that'll give me a chance to focus on the thread here and really engage with you guys, man. I have a lot of fun with this, man. And I hope you feel the same. But I'm going to bring William on, man. And he's going to tell us his stock investor story, at least the start of his stock investing journey.
What's going on, Ryan? Can you hear me good? Everything's good?
I can hear you fine, man. Fine.
Great.
Thank you so much. So you're taking a break from your homework, all right?
Yeah.
Man, super cool.
Hey, I don't mind it.
Super cool discussion we had before the stream tonight, William. And I just want to thank you, man. I consider you coming on last week or 2 weeks ago a kind of a bright spot. People would be kind of interested to know what I take away from this channel. And Connor's visit last week, that was big for me. That was really good. I have a guy like David Oldenburg come on, and he's an expert in his field. And I just feel like we're doing what we need to do when we're associating with successful people. No doubt about it. I don't have a whole lot of patience for people who aren't looking to get ahead a little bit and do what they need to do to be responsible. I wish everybody well, I really do, but I have an affinity for people who are doing what you're doing at such a young age. You want to share with the group what you've been up to?
Yeah. So back in, I should have pulled it up for y'all to be more prepared. But so back in about the 16th of April, I actually went ahead and actually funded my my Roth IRA account with Charles Schwab. No fees involved. I do it all myself. Everything's
Nice.
perfectly fine. And so I was gonna go the pure ETF route so that I could have more diversity, like in my portfolio and like whatnot like that. But with the price cuts that was going on, I was looking at some of these positions that like I could enter with some of these good quality stocks, and I was like,
Yeah.
I might have to bend these rules that Ryan told me just a little bit, and so I did buy some ETFs. The only one that I bought ETF wise was a VOO, was the Vanguard ETF. I bought
Sure.
that, and then for my single stock allocation, I have some in the medical field in Johnson and Johnson. I bought them at about a good 145 ish, like 147,
Yeah.
145 ish. Bought them in that position, and then I also have some in. Let me think. Actually, but yeah, let me just pull it up for you real quick. Give me 1 second, so I can.
Yeah. Yeah. You were saying you got some good quality in there with some
Yeah,
cornerstones.
I got some good ones. I got some good ones. But Johnson and Johnson for a fact. I also ETF, which is Vanguard's ETF,
Mm-hmm.
and then I also give me 1 second so I can log in and make sure. There we go. Okay, hold up. 1 second.
Buy some Procter and Gamble, William.
Oh man, see Ryan, here's the thing. See, and this is the one thing that I'm starting to understand about starting to invest is that
Yeah.
whenever you're my age and you don't have a reoccurring income coming in,
Yeah.
it gets a little bit challenging to kind of like get
Yeah.
on these on these good deals, because like for an example, I've been wanting Disney for the longest, and I think sometime this week Disney dipped back in like 98, 99 territory, and
Yeah.
in my opinion, at this point, if I can get Disney below sub 100, I'm okay. I think that's a great position to buy in at, and I just couldn't because I just didn't have the funds to. And so with that being said, but stuff like Procter and Gamble and Johnson and Johnson, or Pfizer, like these other ones or whatever, they're great companies, but you just have to have just like the capital to really just take advantage of these deals, really, because that's what they are to me. They're just deals. So give me 1 second. I'm about to log in. But yeah, but that's that. Okay, so yeah, so I got VOO, which is cool. VOO, Johnson and Johnson. I also got some Bank of America, which is really
Nice.
good. I also got
Nice.
Duke Energy, and then I got Coca-Cola.
Wow.
So yeah,
Right on.
so
Right on,
yeah,
man. Good
so I'm happy about
diversity
that.
across. Did you just buy one share in the stocks?
No, so for my ETF, I bought 2 shares of VOO, and I got
Nice.
in that position at about, it was around 251.
Fair enough.
251. I bought it at 251, 2 shares of VOO, and I also have 2 shares of Coke. I bought that at around $46 a share.
Okay.
Um, what else? That Duke Energy. I am taking a loss on that Duke Energy because I kind of bought it high. I bought it when it was around $89, but now I know it's been kind of going on like a downturn.
Don't worry
But
about
I
it.
got yeah, it'll be back up. I'm okay. But with that Duke Energy, I bought it at 89. Like I said, it's been going on like on a downturn. But I only have 1 share in Duke Energy. I have 2 in Coke. I have 2 in that VOO and that Vanguard ETF, and then I also have 2 in Johnson and Johnson, and then
Yeah.
2 in Bank of America.
Yeah. This man right here, he's working with $500,000. He's giving you a compliment.
Oh man, Matt Money knows what he's talking about though. I've been looking at
Yeah.
his content and stuff like that, and he knows what he's talking about. He knows what he's talking about.
He's
But that's
good.
really
Yep.
like all I've been on recently. So I've been trying to just come up with some fun so I can just take more advantage of these deals. But really, my goal is to, like how you were saying, I initially invested $1,000, and so my next like milestone is to reach that $5,000 mark, hopefully. Hopefully with 5,000 with just pure dividends though, not pure dividends in like in profit, but as in like just with the companies that I'm going for, I want them all to be kind of dividend aristocrats or whatever. However, though, with that being said, I do have a question for you in particular, Ryan,
Yeah.
and that comes so since I have my allocations in my Roth IRA and stuff like that. So
Yeah.
would you rather take more riskier chances in your Roth IRA? Like, for example, something like a Boeing that you're saying might be a, not even might be, it is a, whoever plays Boeing is going to be a long-term play. But
Yeah.
something like Boeing, who makes planes, who you probably, I can't think of any other big name plane making company that's going to rival them in the long term. So they're bound to come back, in my personal opinion. And so with that being said, would you take chances like that in your Roth IRA, or would you just kind of hold off on those until you get your Roth IRA settled and then open up a taxable account and start doing that?
I would wait and get it established. There's a little bit of a little bit of angst, a little bit of rush, that I sense in that question. When you just within the last 5 minutes gave me a breakdown of just a solid long-term portfolio, regulated utility, a dividend king, Johnson and Johnson, which I feel is probably the number one company to invest in right now, bar none. There is nobody close, right? The tech stuff is really tough right now. You've got Microsoft that is smoking hot, and then you've got Apple that's just about as smoking hot. Took a couple downgrades, and then just shot up to 310 today.
Right, I saw that.
Really
I was like, oh my god.
The long and short, I think. Let me answer your question from a little bit more of a fundamental perspective. I think with somebody like you who's young and has time on your hands, the answer is no. The Roth IRA should be comprised of as much quality as you possibly can get, because once those contributed dollars go into that Roth IRA, you really need to treat those dollars sacred. You really do, because you lose that. Let's say you sell a down position, you can't get those contributions back.
Exactly.
Okay.
Exactly.
So here's the thing. I certainly don't want you or anybody else to tune into my message and say, well, Ryan's buying Boeing, it's time to buy. You have got to understand and stand by for roles, because I don't mind releasing a lot of the behind the scenes research that I did on my own independently. And keep in mind, I've channeled the stock 5 times, right? I've got an $8,100 buffer. I've got an $8,100 cash buffer, basically, house money. Okay. And I had a rule, and I was very patient over the last month. I saw it dabble down to 125, and I just about pulled the trigger there, went back up into the 140s, played, was patient, and then saw my technical opportunity at 121.5. And I just had a
position. That's a great position.
The technical resistance was 121.5. My position was 122. 122.30 is what my entry was on going.
Yeah, that's still good, though. That's excellent.
It's good. I think you're thinking right, and I just want you to shelf that level of thinking. Would I rather you buy a company like Caterpillar right now? Yes, I would. Yes, I would. You bet. Industrials is one of my favorite. There's industrial companies out there that I don't own right now that I would just kill to own. You comb over the defense sector, Lockheed Martin, General Dynamic, L3 Harris. You're talking comb over the defense. I mean, Raytheon, that's one of my favorites that just dropped out of my top 10 with the new acquisition of Boeing. But John Deere, a lot of the machinist, Cummins, a lot of the engine makers, those types of things. So you try to look at your Roth IRA as being that sacred nest egg. It's something that I typically like to keep growth stuff out of my Roth. I have invested in there before, but I'm really, as I get older, trying to fine tune that Roth to be a dividend machine. And I will add this something to keep in mind. And this is for all the investors as well. Make sure that you understand that if you're going for, a regulated utility, you could hold outside the Roth, but a REIT is probably better served within the Roth. Okay. So if you ever wanted to dabble in some real estate, the place to own that is within the Roth, I think. So there's a few of those nuances and understanding about qualified, non-qualified dividends and things. But I think you've done well for yourself, man. Give yourself a pat on the back, because
and go ahead.
I just think you have time is the ace up your sleeve, And I just think so many of the younger generation just give it away. I did. And I'm not the only one, man. So I just applaud your maturity because the talk I had with you before we went live was just awesome, man. I just enjoy the heck out of that because I love success stories, and you're going to be one. You're going to be
I
one.
appreciate it.
Sorry to put that pressure on you, man, but no pressure. You
I
just got to walk the
appreciate it.
walk, you got to do it. You got to do it. You don't have a choice. And you're going to have setbacks. I'm sorry. You're going to have setbacks in the investment world. I'm not going to come and tell you that this program is magic. It's not.
Oh no. I
it's
know.
just,
I know because because whenever I actually started my account on the 16th of April, like I think I saw about a $2 return in like that first 2 days, and then literally like the week following the week that I started my account in, it just went down. Like it went from about, I don't know, $1,005 to about 987 in a matter of just minutes. And then I was like, man, I was just like, you know what I'm saying?
Yeah,
And so it was, but getting those initial emotions out and going ahead and be like, you know what, this is what is expected to happen. But with the positions that I'm in, short-term changes don't affect me, and they shouldn't, and it currently really don't matter to me at all, because it's all about the long-term game, at least in my positions. So
it's correct what you said, but it's also okay to acknowledge that those short-term fluctuations in the stock market, those are real. All right.
Yeah.
Don't tell me you're not affected by them. That's not true. You are, because what you just told me was, wow, and you're a college student, man. Those dollars, man, those are hard-earned dollars.
Yeah.
Right?
Yeah.
I don't reckon. So one of the strategic defensive plays that I always encourage is to have that cash buffer. And if you take one of those as a pillar of my insistence in wealth building, you'll understand someday how important that is. The people who pay attention to me understood how I maximized where I was underutilizing cash over the last 3 or 4 years. Boom, it really pays off when you've got that cash during an event like we've had over the last couple months. It's been the gold in my portfolio, and it helps me sleep at night, and it helps me understand and kind of mitigate and buffer my risk. But when you start investing, man, you've got to get those days and weeks and months under your belt, and you're fine. You'll be fine. You've got enough savvy. You will be fine, because what you said about the long term, all that's legit. But don't ignore your natural reaction and say, you know what? Yeah, I went down a bit today. I stung a little. All right, sucker, bring it. It'll make you a fighter. It really will. It'll make you a fighter, because if you just think that you're just gonna to limp into the stock market and you're not gonna grab the opportunity and grab it and be aggressive with your opportunity, I'd rather have you be tough. That's what I'd rather see. You know what I'm saying?
And what you like I'm following every single bit. Next time that I come on here, I'm gonna have to bring some pen and paper so I can start taking notes more. But because really to me, Ryan, because like I said, I'm new to your channel, but really I've been watching you really because I'm a now soon to be sophomore in college, but really I've been watching you, I want to say, ever since I was a senior in high school. I just didn't really like interact that much with the channel. And so once I got into college, though, really I just treat your channel like a class, really, ever since I got into college. Because once I started to realize the possibility in the position that I'm in, like how we were talking about before the stream, with my situation and stuff of that nature, and at my age, about how I'm just not doing this for myself, but for the people that's going to come after me. And so really what I'm hoping for is that by me doing this, whether or not I retire with millions of dollars or really just even with $500,000, really I've decided in my head that the point of me doing this is to show that those that come after me, that look, if you can get started earlier than what I got started at, and if I can prepare you for that, then the possibilities that you can experience are above what I've experienced. And that can be endless. That can be endless. And so that's really like what my goal is. Don't get me wrong, the goal is also that I'm saying to make millions of dollars too, and I can talk about millions of dollars. But the ultimate goal is for me to really just impact the generations that follow me. But go ahead.
Don't fear success. Don't fear it. You know, if you become a software developer or a video game and you're making, you know, tens of millions of dollars, man, you'll get the first congratulations from me. Because again, I'm all about success. Because for every success story, there's thousands and thousands of people out there that for whatever reason have lost hope, or they've lost their direction. They've lost, you know, and you got to be sharp. You got to be sharp. You can't just give away the farm and expect that success is going to come by nature of the lottery ticket that you buy every week. It ain't going to happen. And I'm sorry if I'm upfront and blunt, but that's why people watch me, because they see somebody in me that I see in you that's willing to walk the hard road. Why? Because when you reflect back on your life, you're going to say, you know what? Yeah, man, it was hard. It was hard. I made sacrifices, man. I could have just as easily went out and spent that money, but I didn't. It was the hardest contribution that I ever made, taking my first $1,000 and going from zero to $1,000 invested in the market, man. I still remember mine. I sold my first Mustang for $3,000. I split it and I started those accounts with $1,500 for myself and my new spouse at the time. This was 15 years ago. 15. Wow. All right. Wow. So, you know, put the pieces together, man. I don't do those portfolio reveals to just say, hey, here's a bunch of money and look whoop-de-doo. It's look what's possible. Pay attention to where I've been and where I've got to. You can do it too. That's the message. And I was hoping you would come on and say what you just said, because I did say that you're going to be successful, but your level of success certainly will be your ability to advocate as well for people, because there's a lot of advocacy that's necessary in this world.
Yes, sir. Most definitely.
There is. All right.
Yes, sir.
Cool, my man. Sir. Tell you what, man, I'm going to bring another guest on. If you want to stay in the broadcast, you certainly can, William. I've got Connor. I want to bring Connor on next. I promised him from last week, and I want to wrap with Connor a little bit. But William, did you say everything that you wanted to say?
Yeah. For a fact. Actually, before I real quick, you've actually inspired me to actually go more in depth and do more homework on this investment and like wealth building thing, to the point where I'm actually thinking about, whenever I get back in college, hosting a radio show, because I go to a Jesus, I can't speak today, to a HBCU, and believe it or not, believe it or not, at a lot of minority serving institutions, they really don't talk about like wealth development and stuff like that. And so really, Ryan, you have been such an inspiration to me. And so, like I said, I actually look forward to possibly maybe in the future having people like you, or JMac Investing, or Matt Money, and people of that stature to join me in a hopefully a really good and educational radio show about wealth development and wealth building and investing.
Drop me a line.
I'll keep you. Yes, sir.
Drop me a line. You're on my team, man. You're on my team. Yes, I'm your greatest champion, man, because you're representing that younger crowd that has the potential for the most impact. You know what I'm saying? Guys like us, you know, I'm in my 40s. I've lived a lot of life, and I got a lot of life to live, you know, but guys like yourself, man, the you know, it's wide open. It's wide open in front of you. And the more we can give back, you know, and a lot of these guys are the same way, guys and gals that are part of this community, they feel the same way. You know, it feels good to give back, man. It really does. I'm glad to do it. And, you know, you're correct. You're correct about your message and intent. And I tell you what, this financial piece can take a big slice out of that pie. You know what I'm saying? It's not the whole pie. There's other things. There's other serious issues. Serious. But this is a big one. Yeah. And I'll support you any way I can. You know that. I'm on your team.
Yes, sir. Most definitely. I'll keep you updated and everything like that. But go ahead and bring Connor on. I'll be chilling.
You're the man.
Yes, sir.
Thanks, William. Appreciate you.
Yes, sir. Thank you.
Ryan, what's up?
First time I shed a tear on my own live stream. I don't know if you're supposed to do that, man. William brought it out of me. William will always be the plank owner for bringing out a tear. The Independent Investor Channel, for crying out loud.
What a bright kid.
What a bright kid. That's what I'm talking about. And the ability to connect, through a platform like this. And yeah, I meant what I said. I'm fully engaged in those type of opportunities, like we had last week as well.
Mm-hmm.
And that's a step in the right direction as far as I'm concerned. I think there's a lot of people out there, if provided just that little bit of motivation and guidance. I mean, he's done all the work himself,
Yeah.
Maybe I've helped a little bit with some of the motivation and fire in that. I'm a motivated guy. Like, I'm full of life. I got that when I've had it for a long, long time. You should have seen me in Alaska, fishing, aggressive, because life is good and it's a beautiful thing. And
indeed,
I just think we get more out of it when we're engaging and communicating. But Connor, thank you for taking me up on my offer to come in a little bit more at the top of the stream. I thought last week was pretty awesome. I actually watched the entire live stream last. I usually review it just to criticize my own delivery and ability and try to get rid of some of those mannerisms maybe that I have. Go watch my first video I ever posted to YouTube. You'll see. Maybe I've improved a little bit, but how you been, Connor? That's you got any updates for us? And if for those of you in the group who didn't know, Connor came on in the end of the last live stream, and he ran basically a group through the church. Yeah. And finance and budgeting was one of the topics. You want to just give a synopsis on that, Connor? Because I was touched, man. I thought it was amazing, man.
Yeah, it was just an opportunity for me to school up a bunch of friends that just needed some guidance. And I was blessed to have some family members that took me under their wing and taught me this stuff from a younger age. And not everybody has a grandpa and an uncle like I had. And so it was a great opportunity to pay it forward. And I didn't share this last time, but the last session that we had, I figured it'd be fun to kind of make a game out of it. So I split the group up into small groups, and we did a Jeopardy online, through Zoom. And incidentally, the team that won were three of the youngest folks that were in the group. And I had told them, the winning team, I will sponsor you in purchasing your first stock up to $100. All you have to do is send me an email, and you've got to explain, using the principles that we discussed in the class, why you're choosing this equity. And the first response that I got, it was just mind blowing. This young kid who didn't know even specifically what a stock was, other than it's something you invest in. Man, the email that he gave me, it sounded like he'd been doing it for 5 years, and it was just so gratifying, So that's kind of the latest opportunity that I had, and I wanted to kind of chat with you a little bit more tonight about your specific strategy and kind of. I know you've been talking quite a bit lately about swing trading, and I'm just wondering, is that something that you've kind of dabbled in more with the volatility, or has that always been a part of your core strategy?
Yeah, so I chronicled for the first time because it's always been a part of my core strategy. It's evolved to be a little bit more of a top go-to in my wheelhouse because the rest of the portfolio is pretty well set. Okay. So I went back and I looked at the reports, and I took from 2015, and I was just curious. I was like, okay, what did I do in 2015 for swing trading activity? $8,168 swing trading activity for the entire year. 2016, $3,398. So half of that. So it's kind of like, okay, invest, take a little profit here and there. 2017, $24,785. 2018, 18,277, so almost 20 grand in 2018. Now, over the course of 17 and 18, those were the General Electric and Kraft Heinz Food fallen angels. So with those two fallen angels, we were still able to generate, that good a trading profit. Last year, the entire year, 22,330, and so far in 2020, $24,709 so far this year.
Really
5 months, whatever I got. So over $101,667 of manufactured cash. And that's what I don't even like the term swing trading, to be honest with you. But you're right. That's what it is. I've just kind of evolved in this thing. And I'm not one of those guys to watch a Gen X dividend investor and say, that's my style. I want that style. Or I watch a Matt Money or a Kyle with passive income or a JMac investing. That's why I like all these guys. It works for me, you know? And it's helping me get where I need to go. Would I have just been better off just investing in these companies and just holding them for the long term? I think not. I think not. My ability to take profits, what can't really be quantified in the portfolio is look at all those times where I took profit and the stock retreated back. And look at some of the multiple entries in a lot of these stocks where I've taken not just one swing trading opportunity, but I've swung trade the opportunity. Boeing is just an example of taking one stock and channeling that stock and taking advantage of it multiple times. I don't know, Connor. I'm split in my answer because I like being as forthcoming with the group because it's the truth. Yeah. It's the truth. Half of my portfolio is passive. Half of it is dividend growth. My Roth IRAs, those are chucker block full, $160,000. All of my trading activity this year has been in the taxable brokerage. So most of that is going to be short-term taxed, which is fine. I understand full well what the implication of that is going to be. So it'll be taxed as income. But I've been doing this a long time, Connor. And when you trade on technicals, it's a little bit different than what you were able to teach in basically looking at a company, best of breed, etc. Why do I want to invest in an Apple as opposed to an Intel right now? Where is it at? I think fundamentals really do play more of a role in that, but I always look at the charts, man. Always. Would you buy Apple right now, dabbling with this? I mean, 325, a 52-week high, right? Would you look at it and say, yeah, I've got to be an Apple right now? I don't know. I don't know. It'd be interesting to just run it out from here 12 months and see who outperforms Apple or IBM. Yeah. I'm just throwing it out there. And people are going to be like, come on, Ryan, really? IBM's done nothing for 5 years. Correct. That's in the past. We don't invest for the past. We invest for the future. Where's it going to go from here? So very, very long-winded answer. It's just that certain aspects of my portfolio are put away and they're working. Okay. Sure. Yeah. Would I recommend that to a new investor? No, but I would pay attention because if nothing else, I don't deliver that information and say, look at me, I'm the greatest investor. I would be awful popular on YouTube if I just came on and actually exploited how good I am at this. Okay. I don't do that. I would rather come out with portfolio building videos that get 600 or 700 views as opposed to look at me. I made 100 grand in the market over the last, that doesn't have its place. It's not scalable. It's not fair to somebody who comes to the channel and wants me to really teach them trench warfare. And that is building portfolios from the ground up. I'm more interested in that dialogue. But hopefully that gave you some insight. I don't mind being transparent. Ironically enough, I prepared those numbers for before this live stream. Those are the numbers.
Awesome. Yeah, and I guess one of the benefits too of your strategy is you're still investing in quality companies. So should the position take a hit, you can always go long on it and recover.
That's exactly correct. I'm not playing. It's not a game.
Yeah, sure.
I just find this interesting. There's been so much rhetoric in the market now about everybody wanting to try to justify where the market is going. And it seems like everybody is trying to justify not being wrong, like I'm going to wait. I'm going to wait this market out. And it's like, investing carries with it some level of risk. The idea is, how much risk are you comfortable taking on? What are the strategic tools to use to mitigate that risk, right?
Mm-hmm.
Through diversification, through dividend income, buffer, etc., having cash on the side, understanding where you are in your life with your employment and the security that comes within, right?
Yeah.
Investing should just be kind of an extension of you. It should reflect you.
Yeah.
It should be a custom fit. And if that's not something that you can handle, because good on me, I'm one of those folks that come onto YouTube, and I don't mind talking about the dark side of investing. If I had done a live stream on March 23rd, I would have had people come onto YouTube and tell me that everything is going to hell in a handbasket. Pardon my French, right?
Yeah.
And people want to just jump on that bandwagon and pile on. And it's like, even during those times, I'm just like, look, the risk existed today, just like it existed yesterday and last year and 5 years ago. And it'll probably be here tomorrow and next week and next year and 5 years from now. So make a decision. Stop being so freaking wishy-washy, Make a decision. Control your risk with the amount of exposure that you put to the stock market. That's super important. Look at your portfolio as an engine, and control it, throttle it with the amount of contribution that you make. Does that help?
Absolutely. Yeah. I think earlier in the stream you were somebody had asked a question about dividend stocks, and I was curious. I wanted to ask you, when you're evaluating a dividend stock, how much weight do you put into payout ratios?
So I've just actually come to really appreciate, there's a couple metrics that I check on Seeking Alpha, and that actually came by nature of Joe Carlson. And without him pointing out the dividend growth over the years and checking some of those dividend history, right? Seeing if they've got a good track record, seeing if there's been any hiccups in their history. Now, that can't be the end all be all, right? Because there was a hiccup in BBL, right? BHP Billiton that I just took.
Yeah.
Nowadays, with the research that is available out there, you can get scoring metrics on anything that you want to see in, for example, Seeking Alpha. The majority of the time, I typically really like to keep the companies that I invest in one arena. In that I'm not trying to invest in thousands of companies in the stock market. You'll see, and go back through my history, there's a few alibis where I'll sneak an Alibaba or a JD.com in there. But for the most part, how many times have I owned Intel, right? A Dow component. How many times have I owned IBM, Apple, for example? I currently own them long now, but Seeking Alpha is a good one. I do like to look at the payout ratio. Obviously, we're looking for something less than 50%, but that can't be a golden rule, right? Because your REITs are, 80, 85% payout. Your price to earnings ratio, there was a survey done on CNBC, and they were talking about PE ratio as the number one metric for measuring a stock. I glance at it for 2 seconds, right? Intel was at 11, IBM, I believe, was at 12. So fairly low. And if you looked at that exclusively, you'd say, okay, well, it's a buy all day. We know that that's not necessarily the case, because had you justified not buying a Facebook on PE ratio, or Apple or Microsoft, you would have missed out on some appreciation. So you got to be kind of careful as to how you apply them across the 11 sectors, where a higher than average, like, Realty Income right now carries with it a PE of 35, right? And that's a justifiable entry here at the mid 50s for a company like Realty, because I think, just a little off topic, but right on topic on this, is I think a lot of people are preferring to go with regulated utilities and real estate companies as opposed to entering into fixed income. All right. So a little bit of a hybrid strategy that I'll just kind of throw out there. That's an interesting thought process, is to step into some of these higher yielding REITs, or some of these really solid regulated utilities like a Duke Energy or like a Southern Company. I own the utility ETF. I really enjoy it. There's only 59 companies in the Vanguard's utility. So it's a small basket of stocks. You own them all. It pays over a 3% yield and you're good to go. You've got your utilities exposure. You can jam that into a Roth IRA and have your exposure there. But it's lots of things to think about for sure. But I typically I do a lot of study on companies. I love to read. I read analyst reports. I really do. I'm interested to know about their moat. So if you don't know what a moat is, so Boeing has a wide moat. Okay. Companies like Coca-Cola have a wide moat, right? Companies that don't sell such an exclusive product where somebody can kind of come behind it and offer kind of the same technology, and then that company's out of luck. So that would be a lot of the analyst reports now will provide you information on how their stewardship is on their dividend. That's another just a key metric. And now you can get these metrics, Connor, just thrown at you rapid fire.
Right.
So it's not necessarily one that you're looking at as a prime decision metric, but kind of a collection of all of them. And then you sit back at the end of the day and your sixth sense has to say, okay, Disney just suspended the dividend. They just opened up Disney Shanghai. Had they not had Disney Plus and went into this swoon, would we be talking about Disney at $60 a share? I don't know. But the question becomes, do I want to invest in this company? Right.
Right. Yeah, absolutely.
And that's the instinctual piece that we kind of help out with a little bit, because I can tell you that each and every one of us are looking at a little different metric. To do a lot of my swing trading, I'm looking at charting. I really am. Where is a company trading in relation to its 52-week range? Looking at volumes, looking at support levels, that type of thing. But for value investing, you really need to get into the income statement, balance sheets. All that stuff is available through the major brokers now. It's very simple to find.
Yeah. And to that note, do you, because for all my individual stocks, I have drip enabled for all of them. And lately, one thing that occurred to me is when some of these stocks start to recover and hit their 52-week highs, might I want to consider disabling that drip and then taking those dividends and dropping them into better valued companies?
I just got this question from somebody last week, and I had never really thought about it before. You know why?
Yeah.
Because I'm in such a habit of jumping into my portfolio and always making sure that I have that setting to reinvest dividends and capital gains, because I do feel that strongly about that really helping to promote that compounding growth within the underlying stock. Now, in M1 Finance, it's a little bit different. The verdict is still out as to whether or not I like the portfolio funding as opposed to the underlying asset. It's cool. It's cool.
Yeah.
but okay, if it's not as good as when AT&T pays a dividend and it swaps into energy, and I don't want it to swap into energy, right? The lowest holding in the portfolio, always trying to achieve that portfolio pie weighting. Verdict is still out. So I've got a healthy mix of both. I've always just abided by the rule to set it up on dividend reinvestment. I mean, are the positions so big, Connor, that you're rendering a lot of dividend income out of these to where, for example, I mean, if you owned 1,000 shares of AT&T, you're talking about a pretty darn good dividend right there. And if you thought that AT&T, for example, was back up at $40 a share, not $29 a share, would it be better to just render those dividends?
Yeah.
Nice to have options.
Yeah.
And they're good. They're good, That's a really good question. I just received that recently through the channel. I think it was from Randy, actually, who's in the group here with Retire with Options. And he was talking about the prospect within brokers prior to this free investing entourage that we were blessed with, that there was a charge associated with dividend reinvesting. And I wasn't certain about that. I've never been charged for that type of activity.
Yeah, me either.
And I wasn't sure if that, because I know, M1's free. You're not going to get charged for that. And Merrill's free. So some of the major brokers, most of them will allow that as a function. I will tell you, the dividend reinvestment program, when I was with Edward Jones, they charged me for that.
Mm-hmm.
Yeah. So just some of those, some of those things, man, to where these young folks like William who come in, they've got all the benefits and all these tools that are just, it's so incredible, to have the power to do what you got to do with that.
Right.
But what is it that you talked about in the class there, that, because you got to make sure that you're not losing new investors. You talked to me a little bit about that last week with the language and not being so, making sure that people understand certain terminology. But what did you guys go over when you were talking about that?
Well, I think the main thing was just educating them on, we walked through ETF.com and looking at different segments of ETFs. And I think the way that I think I talked about this last week is using analogies to connect with people. The moment where the light bulb went off was, think of an ETF as a pack of trading cards. The difference being you get to open a pack, what cards are in the before you make the purchase. And so that really connected with a lot of people. If you could look into a deck of cards and see that there were some rare cards in there or some highly valuable cards, you'd be more inclined to purchase it than blindly buying something that you don't understand. So again, just trying to build the layers and connect with real life experiences that people have had, so that they'll get excited about, hey, let's take a look at this ETF and let's look at the top 10 holdings and what percentage. It's not uncommon now to see top 10 holdings 30 to 50% of the total portfolio, even in a major ETF.
Yeah,
so
that's right. And I think the discipline that you just outlined, kind of looking at the top 10, I think I can expand on that a little bit, and making sure that you're familiar with the Dow 30, right? The gems or the diamonds of the market. I'm invested in most of them. I can take away a few. American Express, which American Express right now is a buy, and I don't own it. MasterCard, few other Dow components, but for the most part, I own them all. And so to understand that, the blue chip companies, and then to work through the dividends lists, all of them. I mentioned the achievers list. That's something that's a little bit more attractive to me. Whereas a company that, you're used to going into, I think familiarization is a good one. I think knowing how well you're treated when you go into a Home Depot, if you want to be a participant, it doesn't always have to be about the balance sheet. It always doesn't have to be about picking that perfect company with accelerated earnings, with no debt on the books, because what are you going to do when that slows down? You're looking at it at a shot in time. And certainly you can look over quarter after quarter, or prior quarters and prior years, to see that growth rate, right? Check margins, things like that. But eventually growth slows down. There will be a time when growth companies like Facebook and Google end up becoming those value companies. It happens. And that's typically, Starbucks kind of flirted with this about a year ago, where they were talking about its valuation up at 30 times and really not having the numbers to justify that. And I think we've kind of seen a reinvention of Starbucks with the implementation of technology. And I think it's re-accelerated their growth. So everybody's kind of back on that, justifying their PE. But eventually that growth trajectory does slow down, and it goes through that transition from growth to value. So
yeah, and the last thing I'll say is I really appreciated your asset allocation video this week, because when I first started, I kind of outlined my slices of the pie, and with the way things have been the last couple of months, I have really kind of deviated from that and focused more on doubling down on some international positions as well as individual stocks. Every time I look at VYMI, that yield is just getting so fat. I've got a pretty high cost basis on it, and so I was feeling kind of hesitant about it. I'd written down this biblical guide of this is the percentage I'm going to have here, and this is the percentage I'm going to have here, and kind of gotten to the point where I'm approaching double multiples of what that pie is supposed to look like. And I watched your video and I was like, nah, I'm good. I can fix this in the long run.
Yeah, exactly. And that's the thing is you don't have to sell something to make up for maybe a deficiency. Like right now I'm at 3% in discretionary, and that's kind of a weak spot, but I didn't want to buy discretionary, man. I don't want to buy TJ Maxx right now. I don't want to buy Raw stores. I don't want to own big positions of Amazon. You know, my portfolio review declared that I sold it for a profit this week, and it's just discretionary is kind of tough for me right now. I don't see a whole heck of a lot that I want to jump out and grab. Nike at $80 was tempting, but I didn't pull the trigger. Just a tough sector, something I'm just not really that. I mean, if it proves anything, I went with a materials play at 8% dividend this week instead, just to kind of boost that little dab of exposure up. But remember, the discretionary is made up in other aspects of the portfolio too. So, if you don't like a single stock in those sectors, I can justify a lot of names in healthcare. I can justify a lot of names in financials, but there's not a whole lot that I can kind of justify in certain sectors. And, energy is one of them. Energy's tough. Outside my top 5, it really drops off. Top 5 being Exxon, Chevron, ConocoPhillips, Valero for sure. And then I would probably dabble in some of the servicers, but the services are getting clobbered right now.
Yeah.
So,
yeah.
But,
awesome, man. Well, I appreciate you having me back on again. I'm definitely going to take the challenge and get a YouTube channel going. I'm planning on launching in June. So happens, I come back on and share it out with everybody.
Hey, if you need any help, Connor, certainly when you do kick it off, this helps to get a little bit of springboard into some subscriber base. It's kind of nice when you have an audience, but remember, man, if you have 100 subscribers, when could you ever fill a room with 100 people and talk about something you're passionate? And I can tell you're passionate about it. I've been kind of checking with one of my eyes some of the responses to some of the things that you've said and said last week. People are pretty responsive, man. You've got a lot of good things to say, and you've got a good head about you. I really think you should try to share your message. I do.
Appreciate you having me on, Ryan.
No problem. Thanks, Connor. Appreciate you, man.
Take care.
All right. Be well, man.
See you.
I might have 2 heavy hitters on at the same time if I can. Kyle, I brought you on same time as Junior. Is that cool?
Yeah, brother. What's going on? What is going on?
What's going on, Kyle? What's going on, Ryan?
Not too much.
Happy Friday, folks.
I can jump down to one of you guys if you want. I don't know if you got pressing stuff, Kyle. What do you got with your schedule, man? Are you all ears, or what do you want to do? You want to go first, or you want Junior to go first? How you guys want to roll?
It's up to you, Junior. I can kick it off if you want.
Yeah, I mean, I don't mind having sharing the spotlight.
How about this? I'll shoot in some highlights. I'm gonna let you take over, and then I'll come back because I come on here like every week. I just want to throw in some lottery stocks, and maybe if you guys didn't catch the Elon Musk conversation on Joe Rogan, you definitely got to catch that. But I'll come back and we can talk about it a little later. I want to hear what you have to say because I jabble on too much. So I'll catch you in a little bit here.
Oh, sounds good. Thanks, Kyle. See you in a bit. Junior, what's going on, my man? How's everything?
Good, Ryan. Happy to be here, man. Thank you for having me on.
Man, you're welcome anytime. It's a lot of fun to have you guys. I like getting the updates from you guys and, hearing what you got going on. Last time we talked, it was kind of not too good up in your area. And I don't want to speak for you. I hope everything is kind of calming down a little bit for sure, because it was a hot spot.
Yeah, I mean, as for me, I'm personally, I'm okay. I'm still am going to North Jersey and New York, where still obviously there's heavier cases. I think we're projected to open businesses around June. So it was supposed to be May 15th, I believe, and now they're gonna extend it to June. So hopefully, but for me, I even if it opens in June, I'm not going to be rushing out to any restaurants or any like big social gatherings. I'm going to keep myself safe. And I told my girlfriend that, you know, if we need to go out for groceries, we'll continue to do that. We'll cook here. You know, friends and family, we can do video chat, either Zoom or I want to try Messenger group. I think it came out last week, the Messenger group thing on Facebook. I want to try that.
Oh, that looks pretty cool. I want to try Teams.
Yeah. Oh, Microsoft Teams. Yeah.
Yeah.
So I want to try that, but just I'm just going to keep the same routine until, you know, I know we're not going to get a vaccine, and they're saying within a year, maybe. So, you know, and just, you know, keeping myself safe. It is nice going to New York City with no traffic, though. You know how it is.
It's gonna be surreal, man. Oh my God. It's got to be crazy, like kind of eerie, maybe. You know, I had a guy get promoted actually a couple weeks ago. They let him down on Times Square. I'm sure he had permission to do that, but there was nobody there. Freaking nobody there. And that's my first time in Times Square. I can tell you there was absolutely people there. It was crazy. Like, holy moly, this is nuts, man. You know? But,
like I mentioned before, if you see New York City like that, that's when you know the whole country. It's a problem with the whole country, because with New York is number one as far as finance, right? Wall Street, fashion, right? Movies, right? And then right now, all productions are halted right now, so it's just taking a beating right now. And even where I'm at in New Jersey, it's the same thing. So just trying to be safe. But I wish Kyle came back on, because he just talked about the Elon Musk and Joe Rogan interview, and I listened to Joe Rogan. I was just listening to that yesterday, so I won't spill it too much, because I know if he hops back on, we could talk about it. But it was actually interesting. I'm sure you heard about it.
No, I did not. I did not.
Should I say it? I don't know. Maybe I want, I'll say it. Hopefully he doesn't get upset. But pretty much, Elon Musk, he was the two highlights was he was talking about Warren Buffett, right? Where he said that he's not a big fan of Warren Buffett, like his style in investing. And pretty much to paraphrase it, he was saying that, analyzing, for someone to analyze that long of putting capital into Coke and Pepsi, I don't feel like it's fun for me. It's kind of boring. And also, too, he talked about how us being shut down, like staying in, is not such a good idea. He felt that we should have, even with the coronavirus, still being out, we should have been out. Business should have been still running. So, but it was actually interesting, because as soon as that interview happened yesterday, CNBC, they highlighted those two things. And I forget the gentleman's name, but he's not a big fan of Elon Musk or Tesla. And they pretty much obviously pinpointed the Warren Buffett comment, which that's his opinion. It doesn't change my idea, my mindset of who Warren Buffett is. So that's his opinion. He's an intelligent guy, Elon Musk. So it's not like he's just saying, "Oh, you're wrong. You can't be saying that about Warren Buffett." That's his opinion. And also to the guy, they talked about his I believe his son's name. I can't pronounce it, but it's like a weird name. And the lady in the CNBC asked the guy, like, is there a way to pronounce that name? And he said, "Oh, they didn't talk about it in the show," which they did talk about it in the show. In the first minute of Joe Rogan podcast, he said how to pronounce his name. So when I saw that, I started laughing, because I was like, man, these guys will do anything they can to get on Elon Musk or Tesla. But that's probably because they lost, millions of dollars shorting the stock. So I personally don't own Tesla, but I love to hear the story. I like the story. So anybody that has Tesla, that bought it, especially in 200s, 100s, good for you. I know for you.
I own 0.44 shares. I'm not kidding you, man. I'm up huge.
Like 100%, right?
Yeah. It's look. Yeah. Come on. I mean, that's luck. You know, and that there is an underlying message that can come out of that. It's not always about having a stock licked. What I mean by that is it's not always just some glaring, you know, balance sheet, gleaming, crystal clear, perfect, right? Um, it's not always about that. The bottom line in the stock market is money. It is. And I felt like there was enough surrounding the company. I'm more into the company for the technology, to be honest with you. And I am. I think Elon Musk is a genius, no doubt about it. I mean, probably has done more to contribute to the positive in the world by inventing that technology, right? So that's what I'm interested in. On the other side of the coin, leave Buffett alone. He's probably done more for humanity than a lot of people through his philanthropy. So you can say what you will about you thinking that you're better, I guess better than Warren Buffett. I'm not really sure, but Warren Buffett runs Berkshire Hathaway. Warren Buffett invests in a way that reflects the goals of his company. Okay. He doesn't need to invest like me and you. He doesn't need to invest by picking the bottom. He doesn't need to provide transparency to the masses on when he's stepping into the market. He doesn't need to do that. The only thing that Warren Buffett needs to do is be patient. That's it.
And then the thing I respect about Warren Buffett is he was never big in investing in like big technology companies. You know, he wants to invest in companies that he can understand, that's profitable, that can make money. And remember we talked about a couple weeks ago, like people that they say that, you know, the stocks you invest are boring companies, but like Johnson and Johnson, those companies, they make money. That's the number one holding in my traditional account. And there's a reason why, because if you look at the track history, you look at the products, they're diversified, billions of dollars in cash assets. They pay out, the payout ratio for dividends don't exceed over 50%. You know, it's a great company. And the only stock, as far as a growth stock that I really love, is Facebook. I'm really bullish on Facebook. I love their balance sheets. You know, say whatever you want. You know, a lot of people can get on Facebook, but I love
it's good.
It is a really good balance sheet. You know, 60 billion in cash assets, very little debt. They're diversified, and I don't know if you noticed, they have a lot of these like Instagram Live that's been going big right now. They have these Instagram battles with artists. It's actually pretty dope. I've been watching it. I just saw.
I'll have to check that out, man.
Yeah. So tomorrow night's going to be Jill Scott and Erykah Badu. So that's going to be two artists.
Nice.
I hope Jill Scott wins because I actually saw Erykah Badu in person. She's a great artist. I love her music. For her concert, only concert in my life I ever fell asleep in. That's how bad it was, because she was just maybe high or something, just doing a bunch of freestyles.
Yeah, right. I agree with you on Facebook, man. Facebook is probably the best growth value out there, to be honest with you. It's still inexpensive, which is scary to say. Because it's run up. It's a very, very powerful company. You know, businesses have to do business with Facebook. They have to. It's part of their budget.
Oh yeah.
You know, and they are the premier advertiser, and I think they get like $7.50 per user, monetized user. It's insane what they get. Comparatively speaking, I think Snapchat gets like $1.50. $2, like that.
Snap. I know people say, you know, Snapchat's going to be bigger. I'm like, okay, say that to yourself. You know, like Jay-Z said, men lie, women lie, numbers don't lie, and I'm always about numbers. And they IPO'd back in 2013, I believe. Was that like? So it hasn't been 10 years since they IPO'd, right? I want to say 2013. So and then if you had it back then and held it for 10 years, I believe it's definitely going to be a 10x stock in the 10 years. It's definitely going to be 1,000% stock. I truly believe that.
I think you're right. I think Kyle would agree with you too, actually.
Right, Kyle?
Kyle agrees.
You got me so excited, man.
No, I had to bring you in. I knew.
I don't want to touch base on the Tesla stuff again, though, unless you want to have that little debate. But I just got to recommend, man, everyone's got to watch that. That was the most thought-provoking interview that just shot the stock right back up. That guy's a legend, man. I just noticed that you missed some of my favorite highlights anyways, was the frugality He's giving away all his worldly possessions. He's
Oh, yeah.
downscaling everything. Like, it's wild, the new mindset that he has, because he wanted to build a multi-billion-dollar mansion and realized his time was better wasted on Mars. It was super fascinating stuff. I also hold Facebook, man. Every time you're talking, I'm like, man, I'm on this guy's level.
Facebook, man, I love it.
Yeah, I got pretty lucky with Tesla there, but I want to throw an interesting stock out, because if you guys want to, when I've never had an issue like this, I found a penny stock that's been on the back of my mind for a while. I always kind of check their stuff, because before they IPO'd, I emailed them, and they started calling me and interviewing like what I'm after, like how can I invest in their company, and they're sending me all this, just all the videos and stuff of their conference calls with Kevin O'Leary and just their teams. And I'm like, man, this company's pretty serious, considering I'm a nobody, and they're going like way out of their way to try and get me involved in this. So I finally started watching some of the videos. The company's called MindMed. I'm sure many people have already heard about the psychedelics, if it's crossed your stock list at all. But it's called MindMed. I'm going to try and synopsisize it a little bit. It's going to be a bit of a challenge, because we're talking about pharmaceutical, which I hate the space with a passion, because it's out of my reach. But if you want to watch the video, look up MindMed. I think they got a YouTube channel. Look up the most recent one that Kevin O'Leary just did, I think yesterday. And it'll absolutely just terrorize your mind on like the spectrum that this company has, what might be capable to them. So they're trying to take out, so essentially they're trying to hyper focus on the chemicals in LSD, and they realize that they can pull out the hallucinogenic effects and directly take all the benefits. And they're saying that they can cure depression, anxiety, ADHD with no negative health effects subsiding to it. And I know it's a far stretch to be throwing that out there, but you've got to look at their information. I mean, once they started sending me this stuff and I started analyzing it, and you look at the disruption, they're also trying to prevent opioid addiction. And they're saying that this technology they have will completely cure opioid addiction without having to wean anybody off the drugs. So it's it's very binary. I like the way Kevin O'Leary says it, because he says it's only going to go one of two ways. If it gets FDA approval, it could be a $50 or $100 billion company, and they want to partner with Johnson & Johnson. They don't want to legalize these drugs. They just want to use them for these very specific purposes, and they have a very good focused mindset. But I've never been like faced with a company like this where it's so binary. It's either a $1,000 investment could be worth 300 grand if they pull this off. It's just a waiting game. And I mean, it's held up through the entire crash that we've had, but that's because anybody investing in it is pretty aware at this point that they're gambling on them getting FDA approval. But I completely turned my head away from it for the longest time. But if you guys get some time and you want some more thought-provoking just stock companies, I mean, this one will take you down a rabbit hole that I think I'm just going to throw like 500 or 1,000 at it and just not look at it for a decade and see if it pays off. But the fact that like this guy managed to drag Kevin O'Leary down this rabbit hole, and Kevin got his whole team on it. And this is also the same company that took the CEO of Canopy Growth Corp. So when I was looking at their team, and
he's conservative investor too, man. What's the ticker symbol, Kyle?
It's MMED, and it's on the NE, I think, for the Canadian side. I think they have one on the New York side as well, but I can't remember the exact the ticker. I think it's MMED. Yeah. But yeah, don't like I said, it's
Canadian exchange, right?
It does both. I just can't remember what the ticker on the US was, but it's like on the US, it's probably like a 30 or 40 cent stock. But yeah, you got to watch the info on it. It'll absolutely blow your mind. Like the revolutions, just
it's exciting.
It goes
stuff,
back,
man.
Yeah, it goes all the way back to the 40s and 50s. Like they're buying out the patents to the information and the testing that was already done. And it's giving them this huge advantage over people trying to use like magic mushrooms and all these other things, because they have to actually get the testing. They can't get anywhere near the FDA without testing. So they're literally using the years of testing that was done in the 50s. And then they're going to run a few phase trials, and if they can get them approved, then they're basically up for FDA approval. It's some fascinating, wild stuff. I don't know if you guys have any other stock.
I was going to say, I got to check it out, because Kevin O'Leary, he's a established investor. My first time I ever saw him was on Shark Tank, but he's a established investor. I need to check it out.
I have a love-hate relationship for the guy, because that was the guy that when I used to call him 5 years ago on BNN, and he's like, "Oh, you need to own oil, don't own Coca-Cola," and now oil's tanked. Coca-Cola's still doing pretty good. I'm just like,
that's why
I take it. You got to take it in strides.
it's always important to do your own research too, because even when the market started going down in the beginning of March, everybody was rushing into Carnival Cruise, and then I did some research, and I know that they suspended their dividend back in the last recession in 08. And for me, it's like, you know what? If they suspended in 2008, this one's even a lot worse because now no one's going on cruises. So I knew that they were going to, in some shape or form, it had to be suspended because they weren't going to be able to sustain that dividend yield to be able to pay the shareholders. So I just,
it's tough industries, man. I mean, the airlines, I know a lot of people are buying into them on like ETF jet, just because they thought the crash was too extreme. I think there's going to be a bit of a comeback, but I don't know if Warren Buffett's right about the competition. And just like, again, I'm trying to add up that time it's going to take to pay off that billions of dollars all these airlines are taking on. The math's kind of hard to add up, but it doesn't add up well.
Well, the airlines, most of them are, most of the people that are buying them are young Robinhood investors. And Brian, William, the 19-year-old that came on earlier, that's what I loved about him. He didn't mention anything about CCL or NRZ or any of these like stocks that they're not profitable. He talked about a good brokerage that he opened up, Charles Schwab, a good ETF, Vanguard S&P 500, Johnson & Johnson. So you don't see a lot of these 19-year-old kids talk about those type of stocks. They want to chase these
it's hard for them to afford.
Yeah,
I find even with people that have money, only recently I've been getting my girlfriend into the markets at like the best time possible. So her portfolio is doing amazing, I believe, right now. But even she had the same dilemma of, oh, well, how much does Apple cost? And like that's a lot of money. But I keep trying to remind her that it's the market cap. Stop looking at the price. Look at the market cap and then decide the value. The price is nothing. So she actually wants to save up and buy one share in Amazon, and I'm hoping by the time she gets it, it'll dip a little bit more. But I picked up a lot of. Sorry.
Yes. No, I'm sorry. I was gonna say she could also do fractional too, if M1 Finance.
We don't have those luxuries in Canada yet, man. We're starting to get some. We're starting to get some good accounts coming out with Questrade and Wealthsimple are doing some pretty cheap commissions or commission free, but they all have kind of the pros and cons. Like Wealthsimple, you don't want to do foreign investing in because they take a 2% fee on any conversions of the stock buying, which is kind of annoying. But if you're just buying Canadian stocks, I mean, you're not going to go wrong with that. But overall, man, we've kind of gotten used to doing big lump sum investing. I've always kind of had it out for the M1 community because I hate watching somebody buy 100 stocks with $1,000. It kind of drives me bonker, if I'm being honest, because I'm so used to throwing in 500 or 1,000 at one stock at a time and just do it month over month. But sorry.
I'm not gonna lie, because I'm a Jersey, so I'm always direct. When I first saw your video about that's when I first saw you. I saw your video about fractional shares, the negative. And at first I'm like, man, he doesn't know anything. We don't have this much capital to dump in, thousands of dollars. But then as I was listening to the video, I understood the concept of what you were saying. I was like, you're right. You can't just, sometimes it's good and sometimes it's bad because it's to the point where you're not going to really establish a good share, the amount of shares that you're going to get long term,
And I think it's how much you care about it too, right? Do you want to be I was using the word professional, and my mom reminded me to stop using that word because I'm not technically a professional investor. But at the same time, you need to approach it with a professional mindset. And if you're just going to be buying fractional shares and you're going to be buying 50 or 100 stocks with a small chunk of change, you're not going to care about them. They're just going to be broad stocks that you hear in the community. You're better off buying an ETF at that point, just in my opinion. I see people do really well doing that strategy. And I honestly, I got nothing against it if it works for you, but just in my opinion, it's just, I can't see how you care that much about 100 stocks with $1,000. You're not going to be listening to the annual reports. You're not going to be analyzing the balance sheets. You're really not going to care that much. But again, if you want to build your own ETF, go for it. I mean, there's nothing wrong with it. Take the top 50 S&P 500 stocks, go nuts. I mean, if you want to do it.
I think to your point, Kyle, I think you run the risk of really watering down the portfolio if you're spreading it out that then. I mean, I do something similar with partial shares, but I'm corralled within 12 stocks, right? The 12 highest growth in M1 Finance, and it's done quite well, really, really well. And so it's a nice opportunity for me to enter into those stocks that I don't really want to own in the Roth.
Yeah.
And M1 Finance is kind of cool because it allows me to buy Amazon and Google and Facebook and Tesla and also keep my mitts off of it. because I can't own Amazon and hold it long, man. I've proven to myself that I'm a failure in that. I've made a fortune every time I've sold it, but I regret it every time I hit the sell button. And I'm like, you remember the previous 12 times you sold this stock? And it's like, again, boom, I hit the sell button, render profit, and it's like it runs up. You know, it just did it. It just did it again today. It's like
I only have a fractional in Amazon because I don't have that much capital to put in for that much. But if I had a full share of that, I completely understand, because that stock it's on a tear, man, these past couple of years.
It's going to continue too, man.
It is.
I think so too. It's one of those companies I have to have some exposure to. It's like Facebook and Google and Netflix and Nvidia. I gotta have something. I gotta have some skin in the game.
I'm not the biggest fan of Netflix though. Netflix and Disney comparisons throw me off.
The Disney,
as they should. Quite honestly, there's a lot not to like about Netflix, but there's a lot to not like about Tesla too. And I own both of those in the portfolio, and they've both outperformed. So it just kind of comes down to, it's like, okay, I get what your burn rate is, what it comes down to, Kyle. That's not what's to like about Netflix. And my comment about Disney having that Disney Plus as really a safety net in all of this.
They got so lucky.
What the freak, man? They would have been in bad trouble without this deal.
Oh, yeah.
And so, kind of a silver lining there. And I'm glad to see, because Disney's a crown jewel. They're a diversified suite of businesses. It's just 3 out of their 5 suites of businesses are directly impacted right now, So it's tough.
And the thing with Disney, and they did the right move of, suspending the dividend, to preserve capital, and the stock didn't plummet at all, because people that obviously people that really know about Disney and their business, it's not too hard to know about it because they're so diverse, but they knew like that was the right move. And if you hold Disney for the long term, pass it down to your kids, you're going to be set. That stock right there is going to create generational wealth from decades and decades down. Because I don't see Disney ever going away.
That's the problem I have with Disney, man, is it's total next generation. Like, everyone that buys it for their kids, and I've always been steered away from it because I always find dividend value elsewhere. And I notice a lot of dividend community, like PPCEN out there is saying the exact same thing you say, right? Like, you buy for your kids. It's not something that I don't think is gonna help you out in the next maybe 5 years. It might give you, I don't know, maybe it comes around, but. I've never been the biggest fan of it just for those reasons. I mean,
the growth rate is rather slow. I think there's a lot to not like about the entire space, to be honest with you. And it's a lot of the reason why my discretionary is so reduced, because all those got pulled out and now they're telecom services. I'm holding. I'm holding the stock long term. To be honest with you, if I was going to give my honest opinion about Disney, I've owned it for 5 years plus. I haven't made hardly anything. Let's be honest. If the bottom line is to make money, investing in Disney is easy to do. But let's be real about the growth prospects and where does it go from here, honestly. I like the fact that they've branched into the service. I like the fact that they pulled licenses back from Netflix. I like that. I like how Disney runs their business. That's the aspect of it that I really enjoy investing in, is that nobody does it like Disney, right? Even if you go to something crazy like their water park, there's no other water park like Disney's water parks. There's never a speck of trash on the ground. You go to a Cedar Fair and go to Cedar Point, which is my favorite. It doesn't compare with the experience that you get with Disney. And so that type of diversified business, I wouldn't call it a wide moat, which they have, because people have to take their kids there. It's like a prerequisite. Give it a few more years, Kyle. Maybe you'll understand.
And they also,
I think you're right. I do think you're right. I think there's some valid points there for sure. But I don't focus too much. I don't focus too much on the Disney corner in my portfolio. I just let it do its thing.
Yeah, the other problem I have with entertainment, just real quick, is a lot of people get caught up in the entertainment producers, but the problem is they're so cyclical as well. Like, I mean, how often are you going to have a Star Wars hit, and when is it going to burn out, and then it's the next thing you're trying to fight for? Like, It's the debate on whether you'd rather own the technology and like the manufacturing behind the content than on the actual content creation itself. I have the same problem with Activision. Like, I'd rather own Microsoft with the cloud PC. Like, you're getting the hardware that everyone's going to use anyways. So you're going to find the success, whether Call of Duty's, go on, sorry.
No, I was going to say Microsoft. That's my number 2 holding is Microsoft. That's a company. I love Microsoft. That's probably behind Johnson & Johnson, my second favorite dividend stock. And the thing is, people are like, oh, Microsoft, their dividend yield is so low. Come on, man. Like, if you really study it, look at the balance sheet. They have so much cash on their balance sheet, very little debt compared to their assets. And
it grows. They're growing the dividend. Like, they're starting to become a little more dividend focused too, which is nice. I got lucky with Microsoft because I was buying it a couple years ago at that 100 range, and I'm over a 2% yield now with it. And I just bought my girlfriend some at 182, 183, and like I knew I was overpaying for it, but now it doesn't seem to be that way. It's just like I'm like, you know what? Just buy it, just rip it off like a Band-Aid. Don't focus on the day to day and just cost average in, walk away from life, and just call it a day.
Yep. And it held up. It held up good during the crash that we had. I think it went down as low as 135, I believe, around that range. When it from year to date, from when it was I think last year when it was like in the lower 100s. So, and it's already
the big market cap, man. It's the big market cap competition between Apple and Microsoft, and it looks like Amazon's going to start competing in this game.
Yeah.
It'll be neat to see if they hold up here. Do you ever watch like the history bars of the S&P as the stocks climb and change positions? It's really interesting stuff to see how fast things have changed over time. I was actually mentioning that as well in Canada. Like, just look at the GDP and what used to make the GDP up even 20 years ago. And I mean, in Canada here, Shopify is now, I think, if not the largest, the second largest company in Canada. And that only happened within like a year.
Yes.
It's mind blowing. I mean, I'd rather have Facebook over Shopify any day of the week. The balance sheet, I can't get over the valuation on Shopify. I see the value in it, but I don't see how long it takes to get to that valuation. So I'm kind of not, unless it dips heavy, but
I'm with you on Facebook. That stock is gonna just keep growing, and it's I think it's not even trading at a premium. It's still such
cheapest S&P, man. Cheapest S&P for sure. Yeah, I don't know. I'm kind of dabbling in more safe stability stocks. I spent the last 5 years building up a lot of dividend stocks, which I'm pretty happy with overall. I still might use some of my line of credit here very soon. I've got that kind of planned out, but I really want to start focusing on more stability and my one speculative gambling stock. Because I mean, I think Tesla is safer for a speculative play than any speculative stock I've ever bought. But I mean, I've never found a spec stock that I've seen so much opportunity in either. So I'll probably throw a little bit at that, but I really want to start focusing on things like waste management. I really love Scott's Miracle-Gro right now. I mean, if you want a company exposed to that MJ sector, man, their last earnings were incredible with that new company they picked up that's doing hydroponics. Like, they approach the MJ sector like masters. I mean, it's going to be the best stock you can buy in the industry. And I wish it would stop hitting all-time highs day after day. It's starting to piss me off because I've been waiting. I got a bit of money sitting and I've watched it from earnings and I'm like, okay, it's not going to do as well after earnings. All of it's priced in and it just kept going up. But I like that one a lot. I don't know. You got any other ones on the side that you're peeking into that aren't like the highest dividend paying, but are definitely, going to be your trajectory stocks for the near term?
Oh, for me? Oh, I'm sorry. It was for Ryan or for me?
No, both of you. I'd love to hear any new stocks. I've been throwing tons of them out.
Oh, okay.
Such a fun weekend.
Well, I mean, just going from my traditional, I love Visa too. That's another stock that I really love. As far as where they're at, as barely anybody even holds cash anymore. Everybody's paying online, and even obviously during this situation that's forcing everybody to pay online. I like Visa over MasterCard. Not to say that MasterCard is not a good stock, but I prefer Visa. I mean, everybody has Visa. If you look in your wallet, any cards you have, Visa and as a fintech stock is amazing. And the other one, I've been buying more like AT&T, Verizon, but I do love Verizon a little bit more, even though it doesn't yield as high as AT&T. But I do like Verizon, and I'm also I have Verizon Wireless as my provider too. So.
Yeah, I haven't touched telecom yet. Telecom is I don't know why I've never been a fan of it really. I should start dipping my toes into some other sectors of the market because I'm fairly exposed to just 5 sectors.
Good, stable dividends. Never have, especially for Verizon, you never have to worry about it.
Yeah, it's a tough play, man. I think I'm reading the comments here a little while ago there too, and I think a lot of people are running into the dilemma of looking strictly just for value plays in the dividend world, and then they just got crushed when the markets just dropped. And I think it's important to recognize that even though I'm a heavy dividend investor, it's good to have those Facebook stocks in there, right? I mean, it's always good to find a few beyond the dividends too. Because man, I'm like looking at my high end dividend stocks, and I'm like, man, if I was just holding these like I originally used to think, like I mean, I would be getting slaughtered right now. Actually, the only reason I'm up on the year was because of Tesla. But I mean, again, Microsoft, Apple, Tesla, Facebook, they make up. I think I checked today; it was like 37% of my portfolio. But they're the only ones doing anything. I mean, I love getting those dividends to spend right now, but you're not getting any growth, and then it becomes the debate on how long's the return. Because it hurts a lot, man, when you're getting dividends, but you're losing that portfolio growth. I mean, it's a very psychological hindrance. Because people are like, "Oh, I'm getting dividends, but my capital is endlessly degrading."
But I'm just holding cash now, because the market it is going a lot higher now, and
if you're holding cash, man, I think you're gonna miss some of the opportunities because the big stocks that you should buy no matter what, I would be dipping my toes into, like I did with my girlfriend. I'm like, I wouldn't care what I'm paying for Microsoft, Apple. Yeah, if you want to play the day trends, go for it. But if you don't own it already, cost average. But in the same heartbeat, there, if I don't lose my train of thought, what were we? Sorry, I'm blanking out.
No, you're saying that that you just
lost myself.
Just to keep going. I guess it's still buying, even though there's some certain stocks that.
Oh yeah. Sorry. No. I think if you have cash right now, man, I would be really paying attention to the value stocks today. I would be real estate. A lot of people hate real estate right now. A lot of people hate the banks. So a lot of really awesome niche financial stocks just got slaughtered. But honestly, man, I'd be hammering those REITs right now. A lot of people hate them, and I think if you're exposed to obviously retail and you don't know what you're buying and it's mostly commercial and there's a lot of hesitance on how many people are going to start working from home after this. But I mean, if you can find the right, like the Realty Incomes, the ones that have nice exposure to condos and residential, and it's nicely diversified. I mean, I would be throwing money left. I have been throwing money at them left, right, and center. The ones that I personally like, because man, go back to 08. Like look at some of these charts. They're trading at 08 levels. And people hate them. I'm like, you can't tell me most of this isn't priced in at this point. Like, they just got slaughtered. Like RioCan, every time I look at it, it has $8 billion in real estate, trading at a $4 billion market cap. And I'm sure real estate prices are going to depreciate, but to that level, I mean, have you ever saw $1 million house that just dropped 50% and you hate it?
Yeah.
Like, I don't get the correlation unless it's a really junky, highly leveraged REIT.
I love Realty Income. I know. I think his channel name is Positive Investing. And he had 3 stocks: the Realty Income, Simon Property, and Tandra Outlets. And out of those 3, Realty, as far as their balance sheet, was the best by far. Simon Property, they own malls and stuff. I don't see anybody going to malls, even if we go back to opening business anytime, in the next month or so, no one's rushing to malls. Tandra Outlets have been losing revenues year to year, just terrible balance sheet. So, for anybody who wants to invest in real estate, Realty Income is, I feel like,
all the Realty Income properties, man, they're open right now,
Yep.
And that was a company that I watched for a long time. You asked Kyle what I'm looking at now. I've already bought them. I'm in them. These 3 that I declared tonight, that BBL, that was a portfolio positioning move to beef up on materials, grab a nice dividend yield. Intel and IBM as well to beef up what is my most underweight sector. And as an aggressive investor, I declared those numbers this week. I needed more tech. And it's like, Jesus, that's where I went. Put some old tech in there, sit on the fat dividend. I think the entry, I think IBM is going to do fine going forward. But
tech, fintech. I had PayPal in my taxable. I'm up 35%. You know, just that.
That'll still continue to roll. It'll still continue to do well.
Yeah. PayPal, I can't get over how it has such a sustained niche in foreign currency exchange. Like everybody
Remember when
I deal with in the
about
States
Moat?
right now.
Yeah.
Nobody's disrupted them.
Doesn't
And I can't figure out why. I tried to e-transfer Matt. I got denied. And then we just started using PayPal. And everything I do now with people in the States, they're like, I'll just PayPal you. Like I can't.
Yeah.
Like, it's the banks made it impossible to transfer money around. And I mean, it's crazy that no bank was like, you know what? Let's just do a system like PayPal. Like no one stepped up to that.
That's a great. I don't know why I didn't mention that's another great growth stock. Because I don't have too many growth stocks, but Facebook, PayPal, just hold those for 10 years. You're gonna make money. I guarantee you're gonna make money. There's no way you can't make money off of those.
Yeah, they're fairly solid. Are those your guaranteed makers then? You bet the farm on those ones? Those are your bet the farms?
Yeah. Not me. I'm just speaking. I'm trying to share the wealth for some airtime. That's all.
NRC,
back
MPW. I like O.
Yeah,
like
NRC's dangerous. Good. They just suspended they slashed the dividend 90%. They went from 50 cents to 5 cents, and I think that the stock's trading at like $6 right now.
Actually, I want to pick your brain a little bit as well because I don't know much about your portfolio either. Are you running a YouTube channel?
Well, me, no.
Okay. Shed some light then, man, because I don't know. I honestly have no idea you're investing. I kind of got your investing class now. Like I've been really enjoying the conversation we've been having here, what you've been sharing. But yeah, shed some light, man. Like if you're comfortable with it, like I'd love to know the size of your portfolio, when you start, what's your outlook like, how much are you putting away a month? Again, if you're comfortable with those questions.
Yeah. I mean, well, I don't have a channel. I started investing October of 2019. And I just only started investing because, I told Ryan I hate my job, my current job right now. So I had to find ways to, make my money work for me, get passive investments. So at first I started just looking at high yield savings accounts. And then as I'm looking at different channels, I looked at Ryan's and a whole bunch of others. And, I just started learning, just watching some good quality videos too, not the whole spec thing, just good quality dividends, researching on Seeking Alpha, Yahoo Finance. I just literally learned all this driving as I'm, working. I drive hours and hours away from my work.
What do you do for work?
I deliver oil. So I drive a truck. So I deliver oil to like the gas stations, Honda dealerships, and I go to like quarries and construction sites. So I'm all over the place. Yeah. So
essential work.
Yeah.
And you do have any other side hustles on the go? I mean, if you hate your job, that is something that I always put above investing, was trying to find something that I wouldn't want to blow my brains out at the end of every day doing.
No doubt.
Yeah. So, it's been, I've been looking at different jobs, especially because I love driving though. So I've been applying. I mean, right now it's been tough because with the whole situation, a lot of companies are not hiring right now. But the only good thing is my job is only less than a mile from my house, so I'm not burning gas or anything of that nature. But I do want to, in the future, start a YouTube channel. I just never have the time. That's the only issue.
It is time consuming, and if you don't have the time, it doesn't seem to work out. I've half asked it before, and it didn't go anywhere. And this is like the first time I'm finding some pretty decent success just because I've been consistent. But yeah, that's interesting, man. So how long do you plan on working the job? Are you going to try and shift around?
Yeah, I mean, hopefully anytime in the summer, if we get back to normal, when more jobs are hiring, especially driving jobs, I'm gonna get off board. And for me, it's
do you never consider doing Uber or, I mean, if you're in the right city, because my buddy does Uber here, and there's certain times of days it works out well. But if you're in Vegas or something, man, those Uber drivers crush. Like, it's crazy the money they make. But yeah, go on. Sorry, I want to hear.
No, I did Uber. I did, especially where I live in Jersey. I'm not far from Philly, so I did Uber down in Philly, those areas. But I only did it for a little bit because I got tired of the driving, and I wanted the weekends for myself too. But also on the weekends, I used to serve, so that was another way to earn a lot of good cash.
That's a good job.
Yeah, I served. Right now I'm just in the process of saving for me and my girlfriend to get a place, get married too. So I'm just doing those things right now.
Yeah, man. No, it's good.
But with my traditional, I rolled over my old 401k. So I had a good amount of money and I invested it in those companies. So I never talk about too much of my dollar amount, my portfolio, but I do have a good size share basis. Like, for instance, Facebook, I have like 30 shares. Johnson Johnson, I have like 52. So not to give out the dollar amount, but it was, I was confident enough to roll it over because I damn sure didn't want to roll it over to my job and put it into these, a whole bunch of indexes that weren't going to gain me that amount of money that I wanted in the future. So
that's a good point.
It's good that you recognize that as well. Like you've kind of figured the time horizon on that aspect and finding the right companies that are going to help stabilize your way there. If you don't mind me asking either, man, how old are you?
I'm 32.
Okay, so yeah, you're fairly young as well.
I'm sorry, I'm 33. God, that's not. I'm sorry. I'll be 34 in June. Jesus, I'm getting old.
Yeah. I think I'm going to be 28 sometime this month.
Oh, yeah.
Yeah, man, I'm starting to feel a little older, but I'm trying to enjoy my youth while I still have it and really hammer the energy I have into hopefully some good projects. I've been fairly fortunate that I've been able to do the jobs I wanted to do my whole life. But it comes with its own set of pains, man. Like this situation, like I stopped counting a while ago, but like I've lost my entire job for 6 months of this year, just gone. And if it wasn't for my due diligence, and again, like I'm in the entertainment industry, man, and I'm looking at restaurants right now. I'm looking at all these resorts that I was supposed to work at, and there's no way they're going to hire me even going into the fall because they're going to be focused on getting their balance sheets up, let alone how many years that might take from the damage this could have caused. So I mean, I'm very lucky that I'm malleable, but when shit like that happens, man, it can definitely it can rock your world a little bit as it has mine because I got so used to my job and just doing it for the last 10 years of my life. And nothing like this has ever happened, right? But somebody always told me I have a horseshoe up my ass because for some reason, every time like something bad happens, I'm always right on the curb of the next good thing that's going to work out for me. So I mean, I got lucky with YouTube and these online businesses because I mean they're really starting to scale up for us, and I'm so grateful because I'm like, man, I don't know even what the next 6 months of the rest of the year is going to look like for me, but I know it's going to be pretty much a write-off. Which sucks.
Well, the good thing is you have your YouTube channel, and I didn't know you were younger, 28. You got the right mindset, and you're gonna do well, man. I'm telling you right now, because you're thinking long term, and obviously, even though the restaurants and the cruises and the things that you have booked up won't be available in the short term, there's other ways that that's the thing. We can't kick ourselves down, like if you have that positive, it all starts with a mindset. Once you have a positive mindset, you can do anything in the world. I know that sounds kind of corny, but that's actually the honest truth though.
Yeah, I totally believe it. If I can throw one more little tidbit of advice in there as well, if you're trying to endeavor into businesses like side hustle, I think it's the best thing you'll ever do because that's what got me into the stock market was learning how to operate a business on my own. And then I'm like, can I get involved with someone else's stuff? But the most important thing is if you want to do that, do exactly what we're doing here, man. It's 100% community. I meet so many people that want to start businesses and they're great on every aspect, but they don't realize that they have to get off their ass and talk to people. And that's the number one thing I see people fail at. And it kind of breaks my heart because you tell them that, like, even with my magic career, when I started out, man, I was working for free. I mean, I remember one March, I had 36 jobs and I wasn't getting paid for one of them. But doing all that upfront work, like, it's like I come on here to have fun with you guys, but I mean, we're sitting in front of 280 people right now. Like, it's hard to comprehend that reality, man, because I'm like, I get to see that on stage. So I understand what that actually looks like, but I think people severely underestimate the value. And considering how awesome Captain Ryan is here, like, I mean, you could pop on, and if you're a good person, I mean, he's going to invite you on and spread you into the community. So like, you shouldn't be giving up that opportunity. And most people will start businesses and hide in the corner, and like, they don't get that exposure when there's a theater with 300 people here. Like, here's your opportunity, right?
And Ryan, well, I'm sorry, man. We've been taking the spotlight away from you. I apologize. I know this is your channels, but thank you. Thank you for letting us talk. Because there was a split second, I was like, oh man, Ryan's been waiting this whole time.
I've been conversing back with the chat, and I've been watching these numbers go up. I don't understand how we have 289 people in here, 2 hours into the live stream, man. Like, I gotta tell these people, like, what are you doing in here?
Man, I guess we're entertaining. I thought I was boring. I'm very simple, but
are you kidding me? It's the Kyle effect, man. Every time he comes onto my live stream, man, I jump up 100. You know, I start off and I got like
love the stream of consciousness,
105.
man. I love when we can all just get together and chat. It's chill and it's not like professional. We just have a good conversation. I think that's where the real value comes into. But I'm being,
but that's the bonus, right? Because we're both, well, all three of us are passionate about finance, right? Because I think that's the best thing about us investing in the stock market, right? Like we have,
I was crying earlier. Money. I was crying, man. Dude, William brought me to my knees, man, for the first freaking time on my own dang live stream, man. I was crying.
William,
what's going to happen now? We're 2 hours into it, man. I'm going to have Gen X Dividend Investor pop in the freaking gallery here. Watch this, man. I don't know what he wants. With 500 viewers, let's go.
Why does everyone troll, man?
It's going to be like wrestling when he unleashes his mask. That's how, when Gen X Dividends comes on that channel, that's what's going to be. You don't want to miss it. But with William, I think
we need to spam him.
The thing I
right.
The thing
I want him to come in. I don't want him to come in now, man. He's not welcome at 2 hours, man. He's welcome in the first 10 minutes of a live stream.
I was lied to, and
this is the 9th inning.
He was coming on. I thought he was coming on, man. Everyone was saying
it'd be funny if he popped in there and I denied him access. I wouldn't put him in the stream. Forget it, man. I only asked once. Sorry, partner. You remember like 6 months ago when I asked you to come and do a collab and you told me no? Nah. See, it's a payback. No,
see, he's gonna do it when we least expect it, though, right? If we don't chant, we're having a regular conversation. He's just gonna.
He's a sneaky dude. He likes that. That mystery, effect, and he does a good job. Because if you watch his videos really close, he's got those people like waving at the beginning. Yeah. See, I think one of those people are him. That's what I think. I think he sneaks himself in there, just to be funny. But good on him. I'll protect everybody's privacy.
And he reaches out to everybody in his channel too. Like if you comment on his channel,
it's insane, man.
It's insane. I respect people like that. I know it's not easy. It's got to be very hard when you have so many people in your comments. And he does that, and kudos to him, man. I love his videos. A lot of I just saw Joseph Carlson's video today. That's a great video to watch for dividend investing. He breaks it down very simple, things to look at: payout ratio, dividend yield, revenues, things like that. Like if you want to invest in individual stocks, you got to love to do those research. That's why I like individual stocks, because I'm excited to look at
he landed an interview with the CEO of M1 Finance. Yeah. And I was like, what up, man? And nobody watched it. I was like, this is the coolest thing ever, man. I'm sure you did, Junior, right? You're a connoisseur of the material, but I was like, good job, Joe. God, man. It's awesome.
Yeah, that was awesome. Did he ever pop on? No, he never. Does he ever pop on? Joseph, you ever talked to him before, Ryan?
He's popped into the thread before, but he's never come into the broadcast studio. Okay. I don't know. I don't presume to know where people are coming from, but it seems like he's got his own style, and I respect that. I think he's one of the best, to be honest with you. I think him and Gen X are two of the best on YouTube, in my opinion. They're real good. They're changing lives, that's for sure. And they're pretty matter of fact about it too. I like when they go back and forth, especially Joe. If you pay attention when he brings the comments up on his screen, and he responds to the comments during the video, that's some of the funnest stuff, man. He's pretty good.
The young kids should definitely watch his channel. This good quality, dividends. I think the problem is when these kids look at these CCLs and stuff like, this is great buy, let me just go, and they don't do any research. You might as well just invest in S&P 500 and call it a day,
Yep.
Yeah,
over the last 2 months, that was the first time I've ever invested in all of the airlines and all of the cruise lines. First time. I was taking advantage of volatility.
Yeah.
You did good too.
Fun. I did fine.
Yeah, especially with the airlines.
I did good. It was a $5,000 bill. Those trades.
But yeah, at this point, man, I'm gonna go. I'm gonna probably kick off here.
Oh yeah,
I'm
we've been
keeping
out
the
2 hours.
household up. I know I got some people coming in and knocking, and they're like, "You're so loud." I'm like, "Yeah, I am. It's Friday, man. It's an awesome live stream going on here."
Yeah, Kyle, it was definitely good talking to you. It was my first time. You're awesome, man. So.
Yeah, man.
Yeah.
It's such a pleasure. It was great. Stream of consciousness. Anyways, I love when these conversations get fluent. I find it's way more entertaining, and I think for the people in the chat as well. And I always have to condemn Captain Ryan here for being such an awesome part of the community. So stay cool, stay awesome, everyone. I'll catch you guys later.
You too.
Take care, guys.
Yeah, man.
All right, Ryan. Take care, man.
You too, Junior. Be safe, man, up there. All right. We'll talk at you soon.
Well, I appreciate that. You as well, too. You and your family.
Thanks. Same to you. Take it easy, man. All right. Bye-bye now. Yep. Super. So I had a whole agenda done up for this evening. We're going to go ahead and wrap it up. We're a little over 2 hours. I certainly want to thank the guests that have made their way in, starting with William and down Junior and Kyle and Connor as well from last week, a carryover as well, but a great furthering of that conversation. Wouldn't be surprised to see some of these folks start on their own YouTube tutorial and investment journey, certainly. And we'll do whatever we need to do to support those efforts. Absolutely. I think something that I was a student last week during the live stream. I really was when Dave was a guest on the stream. It's real estate is kind of an interest, a deep interest for me. So I was kind of like a kid in a candy store. But a real takeaway, I think, when we're trying to surround ourselves with success, and I do have a very, very deep meaning of what that is. Okay. And it transcends and goes a lot more beyond money. It really does. And, but I think if we can continue the conversation and while doing so, strengthen the network of people as we push this topic forward and revolve around it and build the community around this topic, we're going to have a lot of empowered folks out there that have got this financial thing licked. And that's an incredible feeling. It without financial empowerment, it really can be systemic, and it can lead to a lot of other things in your life. But I've found that as in life, if you get this financial thing under control, it'll give you a lot of confidence to allow other things to fall into place as well. And it can just be one of those disciplines that you start. It doesn't have to be the first thing, but it's an awful big one. All right. So that's part of the reason why we offer this live stream every Friday as just a window of opportunity to step in. I think Kyle talked about it best when he spoke about taking advantage of the opportunity. I put that forward. I get a lot of benefit out of providing that opportunity, not only to the guests, but also to new investors like William, who have the opportunity to come on and let us know how he's doing. Let us know how he started. You can't underestimate how impactful that can be to other younger people who are viewing that message and saying, wow, am I up to speed? Am I doing everything that I need to do for my financial future? And if it's not heard from me and it's heard from somebody who's maybe within the same age demographic, sometimes it can hit home a little bit more and is that much more impactful when I have those guests from different age demographic, but different areas in the world as well on the channel. And I just think that contributes to the dynamic, the unpredictable nature of the Independent Investor live stream. We'll continue to roll out the product certainly going forward. We'll be back next Friday. If you do want to be a guest, make sure you're making your way in here as early as possible. We do test equipment before the 9 o'clock stream. You're welcome to kick on. I'm typically on here at least an hour of grace period before we kick off live. So keep that in mind. If you do want to talk to me behind the scenes, you're welcome to do that. It's a window of opportunity that, quite frankly, I don't mind opening for 2 hours or 3 hours every Friday. And I'm glad to do it. It's bringing connections in that I would have never had had I not had this opportunity through YouTube. So thanks to each and every one of you guys who participated tonight, and thanks to everybody in the thread that came on and spent your time with us. It is valuable, and trust me, I do value your time as well, and I want to thank you on behalf of the channel. So with that, guys, we'll sign off. Have a great weekend. We'll catch you next Friday, 9 o'clock Eastern Standard Time on the Independent Investor live stream. Thank you so much, guys. Take it easy.